Good afternoon, traders. It's Bill Baruch with Blue Line Futures. It is your daily midday market minute. The big June CPI report is tomorrow. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yes, the big June CPI report is tomorrow, and expectations are for an increase of 3.1% year over year. This will be the lowest going back to March of 2021. And the core number year over year at 5.1%, remaining a bit more sticky as the services sector remains very strong. So everybody's going to be diving in. What is the core number and how did services move? I like to look at the 3-month trend. If we continue to kind of dissipate from where we were a year ago on the 3-month trend, I think that's favorable, but we still need to be below expectations from what we're reading overall. On a month-to-month basis, it's the expectation of an increase of 0.3 on both the headline as well as the core number. Now, the Cleveland Fed is a 10th higher on all of that across the board. So keep that in mind as you look at things. Now, of course, if this number comes in below expectations, it's going to light a fire under risk assets. We're going to see a big, broad rally. And one thing I like here that's more favorable than some of the prior numbers in the past here, where we've had equity markets sort of rally into this number, we're a little bit off the highs here. The S&P hanging right above our pivot and point of balance, trading right around 44.50 here on the day. The NASDAQ just coughed up what was a positive session. We can still finish well in the session, but overall, we're not running away, and that's a good thing. So if this number comes in below those expectations, I think we can have a true reaction and start seeing the market go higher. Another thing that I'm watching very closely is the Treasury complex. We saw some massive selling to start the month as the issuance for some of these longer dated notes and bonds are going to start to come out here in the coming weeks, and they're pricing that in. So we saw some big selling to start the month. We saw a reversal off of a low after non-farm payroll. I think that we could see a good rally across the Treasury complex with a steepening yield curve. So I'm watching that 5-year very closely coming out of that number tomorrow. If we see Treasuries rally, meaning yields lower, it's going to help bring on a risk-on rally. Now, the U.S. dollar index is lower, but a lot of the driving that is the strength in the Japanese yens of shorts are covering because the euro is weaker and some of the commodity currencies are weaker. So watch those currencies tomorrow as they move, and that's going to be a big factor in what we're going to see here in gold and silver and some of the precious metals. Now, new loans data out of China early this morning came out later than expected and did beat expectations. This is good for the commodity landscape. I think it's driving crude oil higher here today, along with that EIA short-term energy outlook, but also for the precious metals. They're consolidating nicely, very quiet on the session. Look how Asian hours open up. I expect to see a little bump up during Asian hours. However, it's going to be all about CPI tomorrow. And if we see something that's favorable, I think we get gold out above 1950. It could really run. But give us a call. Our trade desk is here to help. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.